Good afternoon, fellow traders. Welcome to another episode of Weekend Analysis, Market Forecast by Clinton and Joshua. Last week, the market did pretty good as what we were expecting it to do. And remember, we questioned you that due to the activities in Iran, due to US and Israel invading Iran sovereignty and attacking them, the market was going to be very volatile and the US dollar is going to be affected. And in cases like this, you have to know how to trade war in order to position yourself to make money. So when I was anticipating that the possibility that Trump or the US and Israel are going to attack Iran, I knew that oil stocks and oil is going to rally. So you can see oil is nearly $100 now from around 69.70. Okay, so those of you who are trading individual stocks, you can be trading oil stocks or defense contracts. The companies that are responsible for making military, all these weapons, whether drones, guns, or warship or whatever for war. Okay, so because in the midst of the war, some of them even have been given huge contracts in the US, and the US has some of the world's largest defense securities companies there. Yeah, so you saw the US dollar also was affected as predicted, and gold was pretty volatile, but it got to all the levels that we were expecting. So it's pretty much the same asset we are looking at, pound USD or cable Nasdaq, Bitcoin USD, then we look at gold. So let's see what the pound USD is telling us, and let's see what we anticipate for the coming trading week. So last week, this is the daily. Okay, normally I like to bring the weekly so that we can pick. It's easier to pick the weekly high and low. Okay, so last week, this was the high of the pound. Then this is the low of the pound. Okay. Yeah, so now let's go to the daily and we'll see what we are anticipating. Okay. We talk about this weekly liquidity point, okay, here. And you can see price came back and swapped that liquidity and it retraced back up. So let's go to the daily and see what we can have. So this was last week range, okay. So immediately, what I could say is that if this week we close above last week high, we will expect price to go up and probably come and take out this liquidity, okay? And eventually it's going to come here, because if you watch this very well, I have to normally check this, okay, on the MT5 as well, because sometimes the candles are different. So if you look at this first candle here from this order block, okay, I'm talking about the red candle, okay. I'm talking about the red candle here. If you look at the bottom here, you can see that it has no wick. And if we have no wick, price tends to gravitate towards it before it comes, okay. But okay, now we are seeing that there is a little wick there, okay. So if there is a little wick there, you can see there is a fair value gap. That is, based on the daily chart here, okay. So we expect price to move back or up, fill this fair value gap before you have another reaction down, okay, before you have another reaction down for the sell. So let's see what, let's come to the 4-hour chart and let's see how we are going to position ourselves for what we think is going to do, okay? So based on the 4-hour chart, you can see from the low, price started coming up. strong impulse down, you have some correction, you have a new, you see, all this can be as a liquidity. Okay, and then we have trend, those small trend line liquidity here, which was also taken as well. Okay, so price has pushed up with this impulse. Okay, yeah. So we have this trend line liquidity here, which was also taken, and we have this strong impulse. And okay, you can also see break of our structure. We don't have any sort of fair value gap, but you can see we have this supply area here, immediate supply area. Okay, so I expect price to come here. Once price reaches this level, okay, of supply area, once price reaches this level, okay, this level of supply area, remember there is supply here, and last week highs also there is that supply there. So either any of these areas, expect a reaction. So once price touches there, what I want to do is I want to come down to the 1 hour chart and see, okay, what is going to do. So I expect price, you can see from the 1 hour chart, you can have a little bit of some clarity here, okay. I expect price to come down there, come back, and probably either retest the break of structure, then we move up to those liquidity areas we talk about, okay? So we move out and come and take this liquidity, or possibly take this before we have another reaction. If that doesn't happen, okay, if that does, so what I'm saying, or in effect, all what we are saying is that we have this break of structure here, okay? So we expect price to either come down this way, retest it, then move up, okay? Then sweep this first liquidity, and we'll have some reaction down for us to actually try to buy, or price to go up, okay? In other words, also, since all this, if you come to the daily chart, okay, all this, or let's see, okay, all this movement, okay, down movement started from here. So we can grab the Fibonacci tool, put it here, and come down here, and expect price to come back into what the discount zone, which is the 62 or 72 area, the discount zone, and buy. Or you expect price to also go up, as we are anticipating, to come to that okay, supply, okay, premium area where we can also sell. So you can see those areas are there, which we are talking about, okay? So this is possibly how it's going to play. So the levels are there for you. Where we expect price to react is there. All you have to do is, if the first play doesn't play out as we spoke about here, the break of structure here, so we expect price to come down, retest the structure, and go up and take this liquidity area and come down. If that doesn't happen, you can use the Fib tool, wait for price to get to your point of interest, come to your entry chart, whether you use the 1 hour for entry, or 13 minutes for confirmation, or 15 minutes for confirmation, okay? Then you can wait for price to give you a confirmation for either buy or sell, and then you buy. But if we look at the daily time, or the higher time frame, which is very, very important, okay? If we look at the higher time frame, which is very, very important, note that based on the daily chart, okay, we had a break of structure here. One, we have another, this liquidity was taken, and we had another break of structure here. So now we are in a temporary downtrend, okay, because of the daily, what the daily has done, okay. So we expect probably price to come to the supply zone, and price probably will come down, and eventually this will be my final target for the sell, okay. this will be my final target for the sell. This area here, I expect price to take it once we coming down. So you can look for the short-term buy, and importantly, do the sell, and then come down, or you wait for price to come to the supply area as we have anticipated, then give you a confirmation for sell and take your sells and take your profits. Okay, always remember how you do your analysis. Always try to move your chart to the higher time frame, the 4-hour or the daily, because that is going to give you the big picture of what market is trying to do, so that you know how you are also going to attack the market. So this is gold. This is gold, and I think last week gold went to around 5,400, and you can see, let's look at it from the daily aspect before and the weekly before we come to the supply. So you can see the reason why gold came to the 5,400 area, 5,408. This is the high. The reason it's reacted was because of this. We have this supply area. Okay. Yes. So we have this supply area. Oh, it's right there. Price just came, tap into, okay, that sell zone there, supply area there, and you can see this was your confirmation. So this new daily candle, or if you move to your 4-hour, you have that entry confirmation. You can see this price came back into that 5-4. You have your confirmation here, and this is your entry. So if you didn't enter here aggressively, here was your entry. Okay, and price came all the way to that liquidity area which we spoke about. Okay, so you can see how price tap in and then took out all those liquidity here. Okay, look at it here. We have a lot of liquidity sitting here. You see, we have all these areas was liquidity pool waiting for price to take it. So price took it aggressively, make this low here, which was also an important area, because you can join that here. Okay, because that was, okay, you can see we have a break of structure here. Okay, so if you extend it, that is it. So price came, this is the retest we're talking about. Tap it, and also we have some form of 4-hour order block, which was very, very strong. And price made that first impulse. And what? If you move this to, if you move this level, okay, into a smaller time frame, you understand. Let's move to the 1 hour and let me show you. You understand why price got there and it started coming down again, because we have this breaker block or supply here, internal supply. So price reacted that. So price came to that 24. Price went above again, okay, aggressively for that buy here. Then price dropped, price went back. And all this were liquidity generating, because remember, Friday was non-farm. Okay, so after that, price came back. Okay, this was some area of liquidity, form of liquidity here. If you look at it, so price came back. You can see the wick into that area. Then after the non-farm, price started going up aggressively, as you have seen. So where am I expecting price to go? I'm expecting gold to come back to 5.3 or 5.4 this week. So how do I play it? Very good. That's an important question. If we look here, this is the 15 minutes chart. Okay, you can see that we have a 15 minutes fair value gap here. Okay, this a big imbalance here. Okay, then you have this candle here. Okay, and normally when I draw my imbalance, most of the time I want to include the last candle, so this can be a supply zone as well. Okay, so instead of putting here, normally I'll include this area here. So this is the way I will play it. Or you can see price could come back. Let's go to the 4-hour chart so that we explain it better there. Okay, let's look at, this is the 4-hour chart. Good. Let's see what we get here. Okay, so look, you can see When you look at the 4-hour chart, look at this wick here and look at this wick here, okay? Do you see? Hold on. Do you see what I see here? We have this here, some imbalance here. Sorry, we have some imbalance in this middle here. Around here, you can see the wick is here, and you can see the wick here. So the space that has been left, okay, that is the space that has been left here. This is the imbalance, and we remember the 4-hour is approaching another supply area. So I'm expecting price to move a little bit here, maybe 5189, 5190. Then I expect price to drop back into this 4-hour zone, 5130 there or a little bit below. Then I'll look for buys for gold to go to 52 and 53. Okay, we don't have all these sell areas. Okay, we only have very little imbalance here. If price come to that 5266, 5250, you can expect a little reaction there to the downside before price will continue. Eventually, I'm expecting price to go to 6,000 or more higher this year, and the short-term price to break that 6,300. Okay, so this is how I'm going to approach gold. So remember, in the market, patience means money. Okay, so when you are emotional, also try not to trade. And one thing I have learned a hard way is that once you are on your charts, you have to be 100% locking and switching. No fidgeting with your phone or no side distraction, else you are going to pay heavily. So remember, this is our disclaimer as well. Clinton and I always say this is a way that we are just expressing ourselves, okay? This is a way we are expressing ourselves. It's a knowledge that we are sharing. This is not a financial advice. So we always ask you to do your due diligence before you act on this, as we will not be reliable or liable for any losses incurred. We are only sharing knowledge to our community. What in our bias or our view we think the market is going to do. That is what we are just doing here. We are not a financial education, or we are not a financial company where we give clients advice on what to buy or what to sell in the market. It's just knowledge that we are sharing with our community. So do well to do your due diligence before you act on it. Thank you. So this is how we think gold is going to play. We have explained it from all the angles for you. Okay, so this is the 30-minute chart. You can see it's a pure price action in play here. Beautiful, beautiful, beautiful. So what I always say is you wait for price to get to your point of interest, then go to the time frame that you use for your entry. If you use 4-hour, fine. If you use daily, fine. If you use 2-hour, 1 hour, 1 minute or whatever, once you get the confirmation after the point of interest, then you start to make your decision where you are going to buy and where you are going to sell. Okay, and this is Bitcoin. Beautiful, beautiful. Previously, I spoke about this level here. Okay, 66. This is 4-hour. Let's move to the daily. Okay, then let's go to the weekly. Let's see what last week did. Okay, so Bitcoin is consolidating. Okay, so this is last week. Okay, so this is the weekly high here, which we spoke about 73, and this is the weekly low here. Okay, but remember I spoke about this big. Let me use this rather. Hold on, let me use this. I spoke about this big weekly imbalance here. Okay, and still Bitcoin, we haven't come down there. This is big weekly imbalance here. Okay, you can see it's around 83, 79, 83. Okay, so we expect price to come there because it's a very big weekly imbalance. There is going to be a reaction or there. Okay, so expect price to generate that liquidity here. You can see price came all the way here, and price has come down. Why? Because if you look closely on the weekly, there is an imbalance here too. Okay, you can see that this is an imbalance. So that's why weekly and daily imbalances on the high time frame are very, very beautiful. So you can see price came in, fill all the imbalance here. Then that's the reaction. So right now, what can price do? Price can come down to this level here. Okay, price can come and retest this level here, or even in the long run, take out this low here. Before me personally, I will start building a long-term buy. But right now, if I'm going to trade Bitcoin, I'll be looking for short-term buy for price to come to this 82, 83 area there. Then I will sell it, probably come and take out all these lows here. Then I will start looking for long-term buy. So let's come to the week 4-hour chart and see how are we going to enter this market here. Okay, so probably based on this 4-hour formation, I expect Bitcoin to probably come down a little bit here. Okay, before I will look for a buy to that zone that we spoke about. So you can see it on the daily. Okay, so always what I said, the market has different structures. If you look at this here, okay, this is one of the structures that is happening here, which as a trader you must know, this is trending. So you see, when we had this break of structure here, okay, we had this break of structure, and we have supply, okay, breaker block here. The price just kept coming down. So this is trending. This is consolidation. So during a period of consolidation, the market is building liquidity to either go up or go down. So if you're a trader, you have to stay out of this zone and wait for a breakout, a clear breakout to indicate upside, or a breakout to indicate a downside. Other than that, you are going to lose money. So this is why sometimes some traders, I've got a lot of people asking me questions. I have a strategy that works, but sometimes it works to a certain point. Then they can have a losing trade for a couple of weeks or months before it comes back to. So this is what I ask them to look at. One day I'll address all the 7 conditions in the market. I have shown you 2. This is a trending market. So you have to know if your strategy works in a trending market, you have to be looking for a trending market like this to either sell or buy. When the market is going sideways or consolidating, you have to stay out of the market because your strategy is not going to work. Any trade that you hit, you take, it is going to hit your stop loss and you are going to lose money. So this is some small education I can insert into our weekly forecast. So back into what we are expecting. So when we come back to the 1-hour chart, we are still looking for our entry model. So you can see 1 hour here. There is a supply here, and also we have some 1 hour fair value gap here. So this is how you dissect the market, okay? So this is the third candle here, okay? So you see in between 69 and stuff like that, you have a 1 hour also fair value gap there, or imbalance. So once price either come down to this low and go up to this fair value gap, which is also representing a break of structure, price can come back like this to retest. Then we move back to the area we spoke about, 70. If you look at the weekly, I think it's 73.83, all the way there before expect price to come down again. So this is how you're going to play it. So the market is open, but at the moment there is less volume because people are not interested in it. So wait for order flow to come to the market and either come down here and go up or break above this area also, okay, go up, come down to retest the same area before it goes up. Just have patience and let the market comes to you before you make your decision, okay? If you are a day trader, remember we don't need to make 1,000 pips or 200 pips, hit home run all the time. Someday you can just make 250 or 300 a day. And remember, this is might look that it's not much, but if you can make $300 or pounds or whichever currency you are trading every day in a year, if you are consistent, that's over 100,000. Okay, yeah. So this is the Nasdaq, our last asset on our list. Okay, so if you look at the weekly, you can see something interesting here. So the market is already looking at price action. It's already telling you that the market is going to probably, it's ready to come down. So this is last week high and this is last week low. And if you can see, we are already hitting some supply zones on the weekly, okay? So if we come to the daily, let's see how beautiful. See, the daily doesn't give us anything. So that's why you have to always look at all the time frame. But the higher time frame is telling us that this market is ready to come down. So all you need now is where are you going to enter? Okay. So you come to the 4-hour chart also. You can see straight away we had some small fair value gap here on the 4-hour chart. So price came back and price is reacting. And we have this beautiful, beautiful area of supply here, sitting here. So we expect price to come back up here. That's where I will be very, very interested. Either price to come down here, this low, take out this low here. Then I will look for buy for price to use all this area as a liquidity, okay? Then generate. So what I'm saying is that when the market opens, either I'm expecting price to come take out this area here, then look for all the buys here. Okay, price to take out to this liquidity, tap into this area before I look for sell for price to come all the way down. That is one scenario. The second scenario is also that price could move up quickly from here. Okay, take out this liquidity, tap into this supply area. I'll wait for confirmation and the markets will come down all this way, just like this. Okay, we can look at it also into on the 2-hour chart and see. You can see it's the same. When we come to the 1 hour is the same. When we come to the 2-hour, you can see it's the same. Beautiful price action. You see liquidity here taking. Okay, those are liquidity here. Look at this was serving as a trend line liquidity as well, which was also taken. Okay, so the levels are there for you. Okay, this has already mitigated. You can see the levels are there for you. All you need to wait is that we are anticipating a downtrend on the Nasdaq and the levels have drawn for you. Wait for price to come to your point of interest and always then you take it. Or like I said, you can always, since we are looking for what a sell here, if we come to the weekly, you can take the fib to look at it from the low to the high. Okay, then wait for your look for your premium, then you can sell from there. Okay, so this is all we have for you. It's a very simple trade. Like we said, if you appreciate what we are doing, simply like and comment, and we want to engage you in discussion. Feel free to drop whatever you want us to discuss, and either Clinton or myself will analyze the market and answer your questions. Clinton is also a very senior analyst, okay, very in-depth in ICT concept, and he does a lot of work behind the scenes. So you guys should appreciate him as well. Without him, you wouldn't have the videos on the channel. Apart from being a good analyst, he also edits all the videos. Make sure that the content that we are giving to you is very clean, so you can see and understand. So always give a shout out to him, okay? We wish you a very good trading week. We will see you next week. And I hope you print some money next week for yourself and your family. If you're still not getting your results, don't give up. We encourage you to keep learning. And once you master and you fix your errors, this is going to feed you for your life. Remember, my mentor, since he learned trading at the age of 21, he is now approaching his 90s. He is a trained journalist. That's what he learned at school, at uni. That was his career. But he learned trading not in a university, by mentors, just like we are doing. And it has fed him the rest of his life. He's never worked as a journalist. He's traded throughout. He's well known. One day I'm going to mention him here, and you guys will know him. He's traded throughout the world. He's well known throughout the world. He's developed his own indicators, and he's done so much for trading. Okay, he was the only one who was able to enter a competition and sent 10,000 to over 2 million in less than 1 year. Okay, a record I'm trying to beat. So, yeah. Once you learn this, you don't have issue with your anything again. If you need a car, you just place a trade. You need a new clothes, you just place a trade. If your wife needs something, you place a trade and you make a profit, withdraw, and go and enjoy it. If your kids or friends or whatever, you need something, you know the market is there to provide. All you need is patience, place your trades, apply proper risk management, and you are going to make money to go and buy whatever you want. So we wish you good luck. Remember, the war is still ongoing, so be very careful. Expect volatility, okay? Bye-bye.